In this video, I'm going to talk about continuation patterns work best in trending markets. Stay tuned. Hey traders, a very warm welcome to you. So, continuation patterns, what are they? So we've done multiple videos on these and focused on these exclusively, but just as a reminder, we've got things like flags, we've got things like pennants, we've got things like triangles, all that kind of stuff. So what exactly are they, and why are they only going to work generally in trending environments? So if we take the flag scenario, and if you guys are subscribers to this channel, you know that I'm a real big flag fan. Pushes up, consolidates, and we're expecting a break of the flag and a continuation in that direction. That's what we're looking for. And in a trending environment, they work very, very well because we've had a move up and it's just the supply demand moving one direction, then just pausing, shifting, and then pushing back in the other direction. Because we have that wind behind us, we have that uptrend behind us, the longer this pause is, the tighter it is, the higher it is, the more likely it is to break. The mistake I see a lot of people making, and obviously guys, you know, let's look at pennants as well while we're here before we push on. So pennants is the same kind of thing, but we've just got a more of a triangle shape, and then triangles obviously is a triangle shape on the chart where we're just doing this and then we're going to break out. Okay, so these continuation patterns, the mistake I see a lot of people making is they try to trade them within a range bound environment. So yeah, the market's been range bound here, and then they see, you know, what they think is a bull flag there, and they want to take it. So the continuation pattern, that could be a pennant, that could be whatever, but let's say it's a bull flag. They see the bull flag there and they're itching to take it. They say, oh, I see a bull flag, I see the either flagpole here, and this is the traditional bull flag, isn't it? The flagpole here, here's the flag. You know, I take a break of the flag and sometimes I can extrapolate that as my target. You know, I can extrapolate the size of the pole as my target, and that works very, very well in trading environments. But when we're in a range bound environment, it doesn't work so well, and they wonder quite often why, you know, it breaks a little bit, comes back down, you know, does this, does that, messes around a bit, and is nowhere near as clean as it is in a trending environment. And that's purely because nobody cares as much. You know, if we're in that range bound environment, you're right in the middle of the range. You know, there's no buyers aren't that bothered, sellers aren't that bothered, so you don't really have a lot of supply demand shift in one direction. You know, you may well still have sellers selling it because you've had buyers and sellers being reasonably balanced during this during this range bound period anyway. And so the whole point of a bull flag is that it's just a pause before the volatility and the momentum continues. And if there isn't really much momentum and you're still within a wide range, you know, it's not going to work so much. Okay, one little thing to add for that, guys, is that if we're in a range bound environment here, and then we get the break and the bull flag, you know, now we're in a different scenario. Yes, the patterns work better in trending environments. You know, that is very clear to us. If we're pushing up, we get a bull flag at highs, we're likely going to get a push to highs. And I'd love to know the kind of numbers and studies of when, you know, how often the first bull flag after a trend occurs, you know, how much more continuation we get, because I'd say that the probability of that working is seriously high. When you've had several, you've got to be careful because it's got a chance of a deeper unwinding, of course. But after that initial kind of pause and push, drive and push, the chances of that continuing continuing strongly are probably quite high. But if we look from a range-bound environment perspective, yes, it doesn't work in the middle of the range, and we just discussed that a second. However, if you break out of the range and you're in fresh territory and you've got fresh buyers and potentially that volatility expansion trade as well, then you can take it, then you can say, okay, I'll take it. And whilst that might not be a trending environment, it could be the start of a trending environment. So you may well get several bull flags before you push on. And so this is the thing, guys, just be careful about trading it in a range bound environment. Even if you need to go back on your time frames and go out and zoom out and see where you are, you know, that might apply if in a year we've been in a trend, but you've got a 4 hourly, it's looking very, very strong and flagging. You've still got to, you know, be careful with that. Yes, of course, the wider the range, if we're talking multiple years and we've seen like a 6 months worth of drive, you're probably going to be okay with it. And you can have a little bit of sense of how strict you put that. But if you've been in a range, let's say for the past few months, and we're only kind of driving for a few days, and you're getting a bull flag on a 60-minute, you want to be a little bit careful with it. It probably hasn't got quite the same power as something that's, you know, been an uptrend for a reasonable amount of time, and you know, and now it's bull flagging on the uptrend and there's still lots of strength there. Chances of that continuing are probably high as well. So just being cautious, guys. You're trading those flags, those pennants, those triangles, those continuation type trades. Look at the bigger picture. You know, they work the best in the trending environments. Also, if you're at the start of a trend, potentially when you're breaking out of a range, but be very careful of trading them within a range, especially a kind of narrow range like that. All right, guys, see you in the next one. Take care, keep the risk managed. Goodbye.